Thank you so much for having me here. It's such a pleasure to be. It's my second time in Moldova. So, why fintechs win and bank risk of falling behind? It's not me, but Boston Consulting Group says that 50% the time to market when launching new products, it's 50% faster when banks move key workloads to the cloud. And another thing that matters is that 20 to 30% of SME customers are at risk of leaving the banks for fintech challenges within the next 3 years. My name is Andrei Manea, and I'm the CEO and co-founder of Cloudhero. Today we're going to talk about why cloud is no longer optional, and I'm going to share you a short case study of one of our customers, a fintech called Flow48, and the real risk of not going to the cloud is waiting. So just a quick note about Cloudhero. We're one of the fastest growth AWS partner in the region, and we work with a lot of startups from the fintech industry and banks and help them migrate securely to the cloud. Now, we've been working with a lot of customers from various industries and from the banking industry, like SoulBank, and a lot of fintechs. Now, why banks do need a hyperscaler? What's the idea with this hyperscaler? The idea is that there are no other options to reach scalability and resilience and multi-region in a private data center. There's no option of doing that. And hyperscalers have a few advantages. I would say one of the first advantages is the ecosystem completeness. Means that it has a comprehensive array of services, not just classic traditional compute and storage services which you find in a private data center. It has platform as a service, which developers can start, use, and build their own applications very fast. It has software as a service, so think of emails, think of collaboration suites, think of CRMs. You can buy them off the shelf in the vast majority of the hyperscaler marketplace. And most important, it has pre-built solutions like generative AI that can help you do anti-money laundering transaction monitoring. You don't have to invent the primitives. It has real fraud detection services that you can use to detect if something happens. Then you can do regulatory reporting. It provides high redundancy and availability. Think of what happened to Ukraine and think of what happens if a data center becomes unavailable, if there's a power shortage. Of course, we have generators, but resilience doesn't mean just having generator or having the availability to start up your data center. It means what can you do if your data center it's no longer functional, physical, it's being destroyed. You have the option to move across countries, or you have the option to launch new territories. Now we're living, and as Moldova is progressing towards the European Union, it opens new market. It opens the option for banks and fintechs to launch into new territories. Then it has enterprise-grade security and compliance. Of course, there's a shared responsibility with everything that means security, but the primitives are there and they are being secured by default. And it's a lot of regulatory and a lot of audits at the hyperscaler levels that provides like the best in class standards when it comes to security and when it comes to compliance. You don't have to reinvent the wheel. Then there's the idea that cloud native competitors are already leveraging the above. So the vast majority of the fintechs are born in the cloud and they start with 1, 2, 3 from day zero. Now, what is a hyperscaler? It's pretty easy. There are 3 options. There are AWS and the other 2 cloud providers. So only 3 hyperscalers are available worldwide. Now, why do banks decide to migrate? Do you think it's the hype? It's because everybody's speaking about the cloud? think it's more about the features. It's about the business needs. I think it's about the regulatory confidence. It's about that cloud providers, those hyperscalers have built-in security and regulatory primitives like PCI DSS, like GDPR, like PSD2. Everything has been built into those primitives, and it's easy to audit. Then, banks decide to migrate because they want to deliver extraordinary customer experience at speed. It's very difficult, and a lot of legacy companies come to us and they're telling us, okay, we want to launch a new platform, a digital platform for our customers, and we want to be agile. We want to deploy new features every week, multiple times per week. But our way of working is that we need to buy server in advance for 6 months or so. We need to plan in advance. And that's very difficult in this age because, as I'm going to show you in our case study, it takes days and weeks for a competitor to build and launch a new product in front of their customers. And I think that's one of the most important things. Then it's about trust and resilience. Always-on banks don't rely on a single data center, on a single point of failure. Of course, they might have, like within Moldova, multiple data centers, but still, it's within one country. You need to be able to fail over across data center, across continents, across countries. You need to make sure you are resilient because people depend on you. And you want, first and foremost, to be able to recover fast from outages. Cloud adoption reduces risks and accelerates revenue. The idea is that there are a lot of studies saying that not just that you can recover your investments within 10 months, but you can deliver up to 2.3x more features in that period of time. It means the 2.x feature means more revenue, means more efficient infrastructure IT, means overall lower TCO. Okay, it's an effort. It might cost at the beginning, but at the end you need to think on a longer period of time. When do banks need to do that? Do they need to time the migration right? Is it something that can be done? When it should be done, I think the question is the most important. And the idea is that you should not follow the hype, but follow the market. I think there's a good timing for everyone, and I think we should look at the customers and start from the customers and see exactly they are our market, what do they require. And the market says we want digital products. We want to have digital loans, or we want to have like digital applications to do transaction. So when you're launching like mobile wallets or SME lending services or instant payments, then you should consider the cloud. When having traffic bursts, you cannot predict traffic bursts, and payment systems are managed by banks. A lot of payment transaction during Black Friday and card transaction, as the previous speaker was saying, the value and the number of card transactions are increasing year over year. And you need to have the payment system that can cope with this, because at the end of the day, it's a matter of technology behind, and it's a matter of infrastructure resources that can cope with these demands. So when having traffic bursts, and when time to market matters, you want to launch new product, you want to be fast, you want to be agile, and you want to make sure you can deliver better than your competition. And this is how one of our customer it's leveraging the cloud. And of course, it's when your data center is aging. I think now it's very difficult to start and investing into infrastructure resources and do like a 10-year plan when things change very rapidly. We're seeing advancements not just at the software level, but also at the infrastructure level, like hardware. We're seeing new GPUs, new AI components that are moving year over year, or companies that are releasing hardware even faster. So also compliance, it's a matter of decision criteria when you start investing within expensive private data center. Now, a bit about our customer, Flow48, which is a born in a cloud fintech. What's the idea with Flow48? They created a micro lending platform. They're giving loans to SMEs. They started in France and now they expanded in the Middle East. And Flow48 isn't a traditional bank, but I would say that's exactly the point, because the challengers won't come from your direct competitors, but they will come from outside. They'll come from companies that you don't expect to. And in less than 6 months from idea, they built this lending platform on top of AWS, and they used advanced AI technology to do like know your customer and real-time risk assessment. And they did it in 6 months, so it's mind-blowing, the ability of launching a product like this. And they managed to do that not just because they hired more developers and wrote they wrote code faster. It's because leveraging the pre-built services that those hyperscalers provide, and instead of thinking about how we do infrastructure at scale, they thought about how we do marketing at scale. Instead of thinking about how we hire people to do KYC, they used AI to do KYC. Soon after they launched, they raised 69 million, and they decided to expand their operation in the Middle East. I didn't know that, but Saudi Arabia, it's a very big market, and also for micro-lending, and also even though it's a very rich country, and also it's a very regulated market, so you need to make sure you run your infrastructure there, you respect the law, you have the processes that are in respect to the reglementation over there. It took just a month for the company to launch in Saudi Arabia, basically to replicate their entire banking system, their entire lending system, their entire infrastructure in a new region. So basically starting a new business, opening it within a new region. It took just 1 month, and they respected the entire data privacy and residency and everything from day one. So my take is that it's not about fintech versus a bank. I think it's about speed. It's about compliance at scale. You need to be able to do that fast, to respect the reglementation, and to think that if you're not doing it, somebody will wake up and doing it. And if we look at Revolut, for example, it wasn't a bank when they started doing payments. And now they're a bank. So they're in the same category as the traditional banks. But they have the agility, and they have the know-how on how to operate this at scale. And what I want you to remain with is that 20 to 30% of SME customers are at risk of leaving the bank within the next 3 years. So my take is that cloud is not just a fast IT. I think it's a business model, and everybody should consider it. So thank you so much for listening to my presentation, and thank you so much for choosing the right way in the last week elections.